and welcome to BQ Prime. A very good morning to all the viewers. Clearly, a day which is action packed with regards to a lot of companies that have reported numbers. There is some bit of consolidation that we're witnessing in the markets, and there is support coming in from Bank Nifty as well. But overall, let's quickly head across to Vivek Karwa, Chief Executive Officer at Vridhi Investments, to understand more on the movers and shakers of trade today. Vivek, good morning and welcome to the show.
Good morning.
Vivek, we have the auto names that will be reporting earning numbers for the month of May tomorrow. What is your expectation, and basis the numbers, what stocks would you recommend?
And that's a tricky question because last month was, I should say, good. Overall, it was good, and the trend should continue because what is happening is across the world, the auto numbers are slowly rising. And that's the reason there is some improvement even in the automobile sector as a whole. So you can see examples of Tata Motors. And the most interesting part, which I would like to watch, is the sales of EV numbers, not just the auto numbers. Auto numbers are fine. Okay, they might be few thousands up or down. That will not be a big issue. But I would be more interested in watching the sale of EV numbers because that is one thing wherein Tata Motors is leading today. And if the numbers are really good, I think, as you asked, individual specific stock, Tata Motors may actually do well. So I think by tomorrow morning we'll have the numbers. So watch out for EV numbers.
Right. So that's with regards to where the auto sales numbers are concerned. Moving on, you have a HDFC AMC that is buzzing in trade today, and we have KK Mistry, who will be retiring as HDFC AMC non-executive director. Overall, what do you make of this counter, and what would your recommendation be to an investor?
Okay, see, it's just a sentimental reason due to which HDFC AMC is showing slow. I mean, it's just 0.2% down because KK Mistry is resigning. Now, see, all those big companies wherein the chairman or the CEOs have spent 20, 30 or even 40 years, be it like L&T or ICICI Bank or HDFC AMC, at some point of time they will have to resign. So it's not a big negative as such. That is one thing. And secondly, most of these AMCs today are process driven. So of course, I'm not undermining the role of CEO or MDs over there. They are leading the companies. But yes, most of the companies are process oriented, wherein if a new person also joins in, it is going to be very, very easy. And most of these companies choose from the hierarchy. So they already know the company well, and they know what are the difficulties and the opportunities they have. So HDFC AMC is one of the good companies in the AMC space. And one more reason why this space is buzzing is after the circular of SEBI on TER, wherein the margins might be hit. But yes, again, that is going to be temporary. I feel longer term, HDFC AMC is much better stock and should do well from here.
Right, so that's with regards to HDFC AMC. Another one which is trading under pressure is a Coal India. They've gone ahead and taken a price hike. Overall, there is some, I mean, I don't know why the stock is under pressure because of this news, because this clearly combats the impact of the wage bill hike as well. What's your view?
See, this coal price hike, which the board has approved, in fact, Coal India is going to garner almost 2,703 crores additional because of this price hike. And as such, coal prices finally are moving up. In fact, so for many years they were stagnant. And that's the reason Coal India is again buzzing. But what I feel is the rally might be limited, or the upside might be limited. Of course, the company is good, fundamentals are good. The management is, of course, again, government of India, so it doesn't bother anyone over there. But since it is a government company, the valuation is always traded discount compared to any other company in the world. So I feel there might be small uptick, and from there, life is going to be normal. But the coal prices have finally moved up. That's a positive sign for the stock. So on rallies, I would prefer taking profit slowly than accumulating more over here.
Right. Moving on, Aurobindo Pharma has been in focus over the last couple of months. There is good momentum, but if you see overall couple of years, it's not a stock that has really given good returns to investors. What do you make of Aurobindo? Because despite better than expected earnings, it seems that the analysts are pretty divided on the counter.
Yes, it has to be because, in fact, I am always on the bearish side of Aurobindo. Not, I'm not talking about just the stock price. As such, overall, the company I don't like. And why I don't like, of course, there are a number of reasons for that. But the company is now, after the stock took a beating from 1,000 rupees or to 400 rupees, they are doing some good right steps. So no stock is bad forever or good forever. So right now, I'll say they are taking some good steps, and in fact, some verticalization process is also on. So they are selling some stake in their subsidiaries, merging some subsidiaries into them. So all this process is going on. And overall, pharma sector has been doing bad for pretty long time now. In fact, last 2-3 years, it has been underperforming. So with that, and last, in fact, 1 month, the pharma is buzzing again. So if you look at pharma stocks today, even all the stocks are almost up. So what I feel is Aurobindo might rally a little more from here, and it has all possibilities because the downfall was quite big. But yes, once it crosses that 750 levels, I will again prefer booking profits and go for companies which are more focused on US because US. I think the downside has been seen there also, and recovery might happen there. And once that happens, most of the companies which are focusing on US might actually do well. So I will prefer other companies compared to Oro.
Right. And how are you looking at a Sun Pharma? Because as you mentioned, the pharma pack is buzzing in trade. Sun Pharma is also up. They've already put in an offer with regards to acquiring the remainder stake when it comes to Taro. Apart from that, they've also signed a licensing agreement for commercializing Philogen SPA's specialty product, which is Nidlegy, and this will be in, I think, Europe and Australia along with New Zealand. With all of this said and done, how are you looking at Sun Pharma? What do you make of the acquisition with regards to the further stake in Taro goes? And from a valuation perspective, what should an investor do?
The valuation wise, Sun Pharma after the recent rally, it has corrected a bit, and I find the stock to be, say, fairly priced over here. And apart from the list of very difficult to remember those names and repeat. But apart from the list of medicines which you mentioned, drugs which you mentioned, there is one more approval which Sun Pharma has got. I think it's called illuminatory injection something. Now, what's the purpose? Please don't ask me. I'm not a medical guy. It's very, very difficult to learn all this. But yeah, they've got one more approval from China, and that's the reason stock is up today. In fact, it is flattish, but yeah, overall positive sentiment over there. And I feel here, as just while speaking about Oro, I told that I would prefer other pharma stocks. So Sun Pharma will be one among them. Looks good to me. Very, very strong fundamentals. And I feel the Taro stake sale, and they are doing the right things. But the pharma industry has gone through trouble, and all the companies are doing right steps, taking right steps so that the sector overall improves. So Sun Pharma would be positive from my side.
Right. Vivek, coming to the hotel pack as well, you have a Lemon Tree Hotels. The stock is almost at an all-time high, and a record quarter is what they have reported. Is this something that you think the company will be able to sustain from here on, number one? And how are you seeing the hotel sector as a whole? Because across the occupancy levels are pretty strong. The ARR is pretty strong. The average rate per rooms is also pretty strong so far. How are you looking at it? Your call on Lemon Tree Hotels and your topic from the sector.
See, till now, there was something called revenge traveling happening after lockdowns and all opened worldwide. And till now, the prices were sky rocketing. In fact, if you look at the flight prices or the hotel prices, in fact, few times when I traveled, I had to take one grade lower room because I was getting that one grade lower room more than the upper grade prices which I used to pay earlier. So this was the situation, and hence most of these companies have made a hell lot of money. In fact, during COVID, I bought lemon at 28 rupees and then probably sold at 80 rupees something. But I feel this trend of higher revenue might not sustain forever. In fact, the prices are already stabilizing. Today, the room which you were getting at say 15,000 a night is available at 12. So that will stabilize at some point of time as life becomes normal. But the results were really impressive. In fact, they have made 44 crores profit compared to loss of 25 crores, which is big. And EBITDA has increased. I think their margins have increased. So overall, they have done very well, and that's the reason stock is looking good. But again, if it goes to 105, 110, I think there it would be fairly priced because this trend, I feel, should not continue. It might not continue at these prices, and hence there should be stabilization from here.
Right. So stabilization in terms of prices is something that can be eyed. Vivek, how are you looking at a Wellspun Corp? Because from a top line and margin perspective, a fantastic number that the company has reported. The stock is up almost 5.5%, 6% as well. What would you recommend an investor to do?
See, Wellspun Corp, I think you should hold. It is one of the companies which is damn cheap even at these rates and ignored. I shouldn't say ignored because last few months it has rallied, but yeah, till now market was ignoring it. And as you said, the silver lining again is the company has declared 5 rupees dividend also on the stock. So overall, it's still on even fundamentally it looks good, and on the charts also it is actually looking very very good. And I feel the previous high approximately the high was approximately 267. If it breaks that, then it will be again in uncharted territory and it can really do well. So you should hold on to Wellspun Corp. Everything is looking in place for the company. Move further upside.
Right. One of the basmati rice producers, which is KRBL, has tanked in trade today, and that's mainly on the back of the numbers that have been posted. Overall, it's an 8% rise in terms of where the profitability goes. Revenues have seen a growth of around 29 to 30% as well. How are you looking at a KRBL? Because in between there was a lot of chatter with regards to pressure coming in, specifically from a shortfall in yield that could be the highest in 2 decades. How are you looking at this pack? I know it's a very small sector to look at, but from a valuation and a stock perspective, any recommendations?
See, most of these companies were enjoying the export orders till now because again, world was unstable, and that situation again is coming to normal phase. That is one thing. And secondly, what I feel is quarter on quarter, 42% drop of net profit is quite big. So year on year, it might be 8%, but quarter on quarter is looking bad. And overall, the revenue is down. See, sometimes what happens is your profits might be down, but the revenue might be higher, and the profits might be down due to various factors. So if your revenue is really good, there is some hope that in future this revenue again will translate into profits. So that is the issue, and that's the reason I think there is correction because the stock also had rallied almost from 220 levels to 440. I feel the stock should stabilize around 320 to 325 levels. So maybe 10, 15 rupees further down from here, not 10, 15. In fact, it's at 366. So 320 should be the target. There you should look at re-entering if somebody wants to. And one more thing, the competition in this space is quite high. So you should really be careful which rice company you're buying.
Right, so that's with regards to rice companies. Another segment is dollar industries. Now, from an earnings perspective, we are seeing this kind of a trend that has been developing. A similar trend was seen with regards to page industries as well, with the kind of drop that we saw in terms of profitability as well as the top line. Now, clearly, it's the organized space which is taking a beating right now, it seems. And how are you looking at this space, and what would you make of a dollar industries, Lux, Rupa, as well as a page industries?
See, I feel this space after the big rally which we saw is now again stabilizing because, and one more thing, the dollar industries results were really bad. They were like 98.5 percentage profit down, which is big. And the biggest factor in most of these companies, see, there is of course competition from unorganized sector, and I still feel that longer term people will move more to organized sector, and all these companies will do well. And at these levels, they look fairly valued to me. So you should start entering slow and steadily, but you should have a time horizon of at least 3 to 5 years. It is not for short term. And the problem with dollar is that the company's margins are at the lowest. So 2.95 percentage margin compared to 14 percentage earlier. So if you're not going to earn margin, how are you going to really run the show? So that's the problem with this company, and hence the stock is doing bad. And I feel it should continue at this phase. Once the margin improves, yes, you might find things changing. In fact, best margin, if you look at in this space, I think Lux has better margins than these companies.
Right, so luck seems to be a better opportunity from this sector as well. Thank you, Vivek, so much for joining us on the show and sharing those views overall with the stocks that we've discussed, quite a few of them in trade today. But clearly, if you see in terms of markets, let's quickly see what's happening around. Clearly, below the 18,600 mark in terms of Nifty 50, we are trending lower as we speak, nearly at the near the day's lowest levels. Little over 300 points cut coming in on Bank Nifty, and we are below that 44,150 mark already on that front. The advanced decline ratio seems to be pretty stable right now on Nifty. HDFC Life, Asian Paints, Tata Motors, Adani Enterprises, a few of the top gainers, whereas on the losing end, you have an ONGC, NTPC, HDFC Coal India, as well as a Reliance Industries, which is one of the stocks that is putting pressure as well. Let's see in terms of broader markets as well what the scenarios. If you see the Sensex itself, a 330 points cut coming in there. We are below the 62,650 mark on the Sensex. And from a stock specific perspective, you have the likes of a Suzlon, which is up in trade. Apart from that, Eureka Forbes is another one, Tega is another one, KRBL 9.5% kind of cuts, DB Realty trading under pressure, Sona trading under pressure 4.5%, Delivery down by 3.5%. So a lot of stock specific action. Broader markets are seeing some bit of pressure, and clearly there is some bit of consolidation. There could be some bit of buying that could emerge at lower levels, and that's what the analysts have been pointing out to as well. That's all that we have on this session. Thanks for watching. Lots more lined up on the other side. Take care.